Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com. Before we get started, wanted to remind everybody to check out the show notes for useful links. So today I wanted to talk about the end of the Big Four. And every now and then we have this conversation for various reasons, usually for regulatory reasons, but now we have the potential split up of the Big Four accounting firms for multiple reasons. Mainly because they're trying to go public, but it's just a changing landscape, and it is because of regulatory reasons, but not the reasons that we thought it would be. We thought that the regulators in Europe or somewhere else would force the Big Four accounting firms to split up, but instead, they decided. EY has decided to split up their audit and consulting practice. And if E&Y split up, does that mean that it's the end of the Big Four and we have more than four Big Four accounting firms? And I think the answer to that is no. And I think what's going to happen is that all the Big Four accounting firms are going to do this split up. And the only one I think that might not do it is Deloitte, because Deloitte just had a record year, $60 billion of revenue, and all they do is just keep their audit practice small. But it depends on the numbers that the E&Y audit partners get, because if the E&Y audit partners get huge payouts and the firm actually grows, then the Deloitte audit partners might actually push to separate from Deloitte Consulting. But what I see happening from this transaction by E&Y is that the other Big Four, or PwC and KPMG, will seek to split up as well. PwC has already done that with their trusted practice, where they're bifurcating their consulting and auditing under different brands. So they've done it internally, but now they might wait for E&Y to do their split up and then use the knowledge that they gained from that to do their own. But what's going to happen, because we know what's happening in the EY situation, and there's been more clarification recently because EY, according to people that we know, has had an internal webcast and there's more specifics. And what they're going to do is they're going to have an assurance company and a consulting company. And the assurance company is going to maintain the E&Y brand. So they're going to maintain the old Big Four accounting firm brand of E&Y. And then the consulting practice is just going to be named something else. But the E&Y audit practice will still exist on its own as the E&Y firm. And so what I think will happen if the other Big Four split up is that all the audit practices will maintain the name, and that'll make sense from an audit perspective. Just because that's where the brand is the strongest, because the Big Four accounting firms sign off on financial statements, and when they sign off on financial statements, they sign off as the accounting firm, not as the individual partners. And so I think there's more value to the audit firms to keeping the name than it would be in the consulting firm. So I think what happens, even if you split those off, they're going to be huge audit practices. EY's already announced that there will be a $20 billion audit practice. And what they mean by that is $20 billion of audit revenue per year. And you can check out our website, the EY official breakup plan, where we have the specifics and the amounts of valuation for each company after the split up. And so you're going to have these companies, they'll be smaller because right now EY latest fiscal year, they made $45 billion as a consolidated practice. And then they're going to shrink to $20 billion. But even $20 billion is a humongous accounting firm. It's almost the size of KPMG, because KPMG is right around $30 billion a year. So you're going to have them shrinking, but they're still going to be even larger than the mid-tier firms. It's going to be closer to a mid-tier firm. But why I think it's still going to be the Big Four accounting firms is because once these audit practices split off, they're not going to have right out of the gate. They're not going to have conflicts of interest, so they will see some growth, even in a bad economy, which we see coming up due to raising interest rates around the globe and just all kinds of issues going on around the world. But even then, the audit practices of all these firms should increase because they should be able to gain market share. EY will jump out of the gate as audit practice and start gaining market share because clients hate dealing with conflicts of interest, and it's going to be easy to get approval for E&Y through audit committee, at least until they start growing their consulting practice. And they will grow their consulting practice. And so I think that's what's going to happen is you're going to have the big four accounting firms split out their audit practice. The audit practices will be by themselves, but then they'll grow consulting practice internally again, similar to what happened after Sarbanes-Oxley. And I think those will just continue to repeat itself, where they have to split off their consulting practice because that's exactly what happened after Sarbanes-Oxley. And so I think they'll grow, they'll have the conflicts of interest, the scandals, and then they'll outsource or sell their consulting practice. And it's pretty smart because, it's an occasional payout for partners once they're able to grow the consulting practice. And it also makes sense because what happened last time when the big four accounting firms didn't do anything about their consulting practice was that the regulators came after them and created Sarbanes-Oxley, and it created this whole headache, and they were forced to get rid of their consulting practice anyway. Or they all chose to, but it's because they were going to get forced to anyway. So I think this makes sense. I don't think it's an end to the big four accounting firms. I was somewhat questioning that in the beginning because we didn't know the specifics of how the split up would occur. But now that we know that it's going to be a separate audit practice, the big four accounting firms will remain for the foreseeable future. It'll be interesting to see how the mid-tier catch up during this time period. But the whole appeal of a growing mid-tier accounting firm was, especially in Europe, was because there's so many conflicts of interest with the big four accounting firms. But now that those might disappear, I think the big four accounting firms might win some work back away from the mid-tier and break away again to reestablish themselves as the biggest accounting firms in the world. And right now we know they already are, but if they split off their audit practice, then they will shrink. And there's just a lot of cool things that come out of this because E&Y's consulting practice is going to have tax professionals in there, and they're going to be really the only consulting firm in the world where they have like a dedicated tax practice inside of it, a non-conflicted tax practice, which will be pretty insane. And there's a lot of interesting things that'll get done there. There's a lot more potential for outsourcing of tax departments. There's a lot of turnover in accounting and in tax departments. Have a lot of turnover, and a lot of companies just want to outsource anyway. And a lot of companies have really small tax departments because you don't need that many people working on tax around the clock. But there's a lot more potential for that. It's going to be very interesting to see how that pans out. There's just a lot of interesting implications from this EY breakup. But that's what I just wanted to go over today because I'm sure a lot of people are confused as to what this means for the big four accounting firms, like how many accounting firms will there be. But just to be clear, like what's going to spin off of E&Y is going to be the audit company, but the other thing is not going to really be only accountants. It's going to be a lot of consultants because there's all kinds of consulting. It's not just accounting consulting; it's technology consulting and things along those lines. And those are really the practices that are growing really big. So it's not really going to be an accounting firm; it's going to be an accounting consulting practice and a technology consulting practice, really. And it's really the technology consulting that's growing the most. So the big four accounting firms will continue into the foreseeable future, depending on how this split up works and what happens to the audit firms after the split up, like whether they grow or whether they die out or whether a lot of the partners leave. But right now, it's pretty evident that the big four accounting firms are going to continue. So that's the podcast for today. Make sure to subscribe to this podcast to get future updates and check out the show notes for useful links. Thanks for listening.